Yo, my people, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing because on this channel I have so much to share with you. Follow me closely as I walk you through. In this video I'm going to share with you an order block theory. Before we delve into it, there are one or two things I would like you to know. Talking about order block simply means blocks of orders. Before we delve much into order block theory, I would like you to know that your success in this market as forex trader is highly determined by you locating premium and discounted levels, because order blocks are being used by institutions as their premium and discounted levels. When I say premium and discounted levels, I'm talking about support and resistance. Yes, because order blocks serve as supports and resistance for price. So one thing you have to know about order block is there are so many order blocks in the market, but not all are respected. Some are strong, some are weak. So to be able to maximize much profit in the market, you only need to pay attention to order blocks that are located at the major zones. Yes, though other blocks that are located at the minor zones are respected, but not so much. You only focus on the main order blocks being located at the major zones. Yes, for instance, assuming this is my order block. And one thing you must know as well is there are two types of order blocks. We have bearish order block and bullish order block. As time goes on, I will talk about it. Now, as you can see, order blocks always serve as blocks. And secondly, we have two types of order blocks. One is a bearish order block, which is located at the premium level, and then the second one is a bullish order block located at the discounted price level. So in this video I'm going to start with the bearish order block. As I said, bearish order block is always located at the premium level, which is the resistance level where institutions place their orders. So this is our bearish order block. So assuming price was coming from this side, making an impulse swing to the upside, and as soon as price gets to the bearish order block, it either rejects at once, making an impulse swing to the downside, or trace a bit inside before making a swing low. Looking at it carefully, the first scenario indicates that as soon as price trades to the bottom of the order block, it rejects at once. And the second scenario has to do with price would trade a little bit inside the order block before making a swing low. Yes, so two things are involved. Now, bearish order block always serves as a level of resistance for price to turn their direction, or in other words, it serves as a wall. So because this is point of interest where institutions place their sales. Now let's look at the bullish order block, just opposite of bearish order block. Yes, assuming price was coming from premium level, as soon as it trades to the top of the bullish order block, it rejects at once, or to trade into it a bit before rejecting. Yes, so that's how it is, my people. Very important. So order blocks play very important role in the market, where financial institutions use placing their sells and buys. Now I'm going to show you how to locate order blocks. In identifying bearish order block, which is always located at the premium level, assuming this is our bullish candle, and you also have our bearish candle. Yeah, so in identifying bearish order block, it is the last bullish candle before the downtrend. Okay, you can again have another candle here. The last bullish candle before the downtrend. So this is our last bullish candle. Yeah, so in locating your bearish order block, you have to identify the last bullish candle, which is this one. So in drawing the bearish order block, there's a way we draw it. You first of all start mapping from the high, this is the high of it, to the opening of it. Again, there are two things you must take into consideration. That is the wick. If the wick is short, then you can include the low wick of the order block. So this is one way of mapping out bearish order block. Yeah. But the second scenario is when the wick is longer, assuming the wick is somehow longer like this. What you will do is, in this case, you only map out from the high bearish order block to the opening of the candle. Remember, bullish candle always opens at low and closes at high. Just targets the high and then the opening. That's it. So this is the second way of drawing the order block. The second one, you don't include the wick because the wick is very long. Just targets the opening of it. But when the wick is short, just include the wick. That's all. That's how we draw bearish order block, so that as price is bearish and in future it's back, as soon as price trace the order block, it will either reject at once at the low of the bearish order block or trace into it a bit before rejecting. Yeah, so order block always serve as a wall for price to bounce back because of institutions sell orders. Yes. So now let's look at the bullish order block. Bullish order block is the last bearish candle before the uptrend, which is always located at the discounted level. Before you draw your bullish order block, you must first locate your bearish candle. So these are bearish candle. Now you have to target the low of it. So this is the low of it and then the opening of it, because every bearish candle opens at the top and closes below. So this is how we draw bullish order block. Okay, so this is the second way of drawing bullish order block, so that in future when price comes back and trades to it will reject off or trade into it a bit, then reject. That's how it is. Now I'm going to send you to the charts and then help you to locate bullish and bearish order blocks. Yeah, now we are on our charts. This is our US dollar, Japanese yen weekly markets. Yeah, don't forget, bearish order block is the last bullish candle just before a swing low, which is located at the premium level where we have our yearly highs, quarterly highs, session highs, monthly highs, weekly highs, and so on. And then our bullish order block is the last bearish candle before a swing up, where we have yearly lows, session lows, monthly lows, weekly lows, and so on. Starting from this angle, which is our premium level, this very candle, which is the last bullish candle, is our high probability order block, this very one. One thing you must know is it is not every order blocks that are being respected in the markets. It's only high probability order blocks that are respected. And these high probability order blocks are located at the major zones. Yeah, so in this video, we are only going to pay attention to only high probability order blocks which are located at the major zones, and this is one of the high probability order blocks being located here. So I'm going to map it. In mapping it, you are going to use a rectangle tool which will be located here. Yeah, so you start from the high of it to the low, because looking at the bullish candle, it has short wick to include its wick. Because the wick is short, you start from high of it, then target low, then we have our bearish order block zone. Yes, and don't forget, we say order block serves as a wall for price to bounce back, because there are levels where institutions place their orders. Yeah, so as soon as price gets to order block levels, it reacts. So considering this bearish order block, observing the price aftermath of it, as price made a little bit swing low, it went for a retest, and this time it traded into bearish order block. Have you seen? It has traded into it a bit, and then got rejected and made a swing low. After that, buyers pushed the price and to trades, and price traded at the bottom of the bearish order block, as you can see here, made a little bit bearish rejection pattern, then finally made momentum swing low. So analyzing the bearish order block zone, two things happened here. The first one, price traded into the order block, got rejected, and then traded back, but this time it didn't trade into it, but got rejected at the bottom of the bearish order block, then finally bearish. Yeah, so order blocks that are located at the major levels are highly respected by price, as it was in this case. Now let's look at another case study. Before we get to another case study, looking at the swing low trend here, we have other order blocks that price is right at, but not so much. In swing low, we have other blocks that are located at the swing highs. Example, look at this last bullish candle here. Yeah, this is another bearish order block, which is the last bullish candle before the swing low. Have you seen? I didn't include the week because the week was a bit longer. So in future, when price made a retest, as soon as it got traded at the bottom of the bearish order block, you could realize price made a swing low again. Have you seen? Let's look at the next bearish order block in a trend. In every trend, there are order blocks. This one to last bullish trend. We have another order block here. One twist here, the small one. There are many, but just that we not pay attention to them because they are insignificant to make impacts in the market. This another small one here. Yeah, this one, its body is small, so you could include the wick, and another one twist here like that. Yes, let me include the last one, and this another one. So examining the downtrend, you could realize that bearish order blocks are located at the swing highs. So at every swing high, you will see bearish order block there, which is like a staircase for price to be bearish. Yeah, so that's it. As price got to the discounted level here, it made bullish rejection patterns, then went bullish with a strong momentum, and then got rejected at the bearish order block level here, which was our level of rejection, then made another swing low. Yes, now examining this bearish trend, you could realize our bearish order block is the last bullish candle here. I mean this one. This bearish candle, which is the last bullish candle here, also serve as a very strong order block zone here for price to reject at. Looking at the market carefully, you could see price rejected at the low of the bearish candle. You see this one here, it made a retest and got rejected at the low of the bearish order block, made swing low, came back for a retest, but this time with a small pips differential, made a swing low again, went back for a retest again with a small pips differential, made a swing low, went back for a retest, then like that, and finally went bearish. So looking at it, bearish order block is very effective when trading. These are levels where institutions place their sales. Yes, same thing applies to bullish order blocks. Yeah, so that's how it is, my people. So before you can make it big time in this market, you must always trade order block levels. They are high probability market turning points levels for price. Yes, looking at here, price got rejected at the order block level with marginal pips differential, then made a swing low to the discounted price level, went back, got rejected at this bearish order block. Now looking at this zone, we again have our bearish order block. Yeah, our last bullish candle before the down move. This will be our bearish order block. Yes, so the whole of this zone is our bearish order block zone. So as you can see, after price made a down move, it went back for a retest, but it didn't trade exactly at the low of the bearish order block. It only got rejected at the order block level with marginal pips differential. After that, it made a swing low. And let's see what happened afterward. After making swing low, it got rejected at our previous low, which was our level of interest, then went back for a retest at exact level, but not exactly, but almost the same. Are we seeing? After that, then price made a swing low, came back for another retest with a relative double tops formation, then continued to be bearish. Yes, in future it came back again, traded into a previous bearish order block here, this one. Yeah, my fellow traders, this is how we locate order blocks in the markets. How we locate bearish order block is the same as how to locate bullish order block. Yes, in this case, this is our bullish order block, the last bearish candle before the uptrend, this very one. Yeah, bullish order block is the last bearish candle before the up move. So as I have marked the levels, you see after price left the zone, it got rejected at the premium level, then made a swing low back to the bullish order block level. I will see to the low of it, then went back for the immediate order block level. This very one is the immediate bearish order block level because the last bullish candle before the bearish move, this very one, the whitish candle, that's our immediate bearish candle. As you can see, first price got rejected, made a swing low, went back for another rejection, then came back to the bullish order block. This time it has traded beyond it with a marginal pips differential. Then let's see what happened next. Yeah, afterwards price went up to clear equal high and also traded at the bearish order block. Yeah, then came back. This time it went far beyond the previous bullish order block. Yes, because of the coronavirus that happened years ago. That is why it came beyond the bullish order block. After that, it came back at a discounted price level. Now currently our US dollar Japanese yen market is what? Bullish, meaning US dollar is what? Having an upper hand over Japanese yen. Yes, so my people, that's how we locate our bullish and bearish order block. Remember, you only draw the zone from the high to the closing of the candle. Yes, and then one thing you must also take into consideration is not all order blocks are being respected. Yes, only high probability order blocks that are being located at the major premium and discounted levels are so much respected. And also, high probability order blocks are always located at the stops. When we say stops, we are referring to sessions highs and lows, yearly highs and lows, monthly highs and lows, weekly highs and lows. Yes. So as bearish order block is always located at the premium level. That means that's the level where we have our sessions highs, yearly highs, monthly highs, and so on. And then bullish order blocks, which are located at the discounted level, is the level where we have our sessions lows, yearly lows, monthly lows, weekly lows. Yes. And also order blocks are being located on any time frame. Yes, but when doing the analysis, we always target the higher time frame to locate our order blocks. So once we are able to do that, then we scale into the smaller time frame for our entries. That's how it is. Example, as in the case of this, once we are able to identify order block on a bigger time frame, which is what, weekly time frame, then we zoom in on what, the smaller time frame for our entries. Yeah, so my people, we have come to the end of this tutorial. In my subsequent video, I'll come out with the continuation of the order block. Yes, so see you in my next video. I love you. Bye bye.